It's all fun and games to build a building. It's all fun and games to flip deals.
Yeah.
The meat and potatoes at the end of the day is how you run these properties, and you really find that out in times like this when things start to slow down. The cracks really start to show. Because if I've learned anything, like you need to have a mentor, and that's probably been one of my biggest problems. I haven't had a mentor in this space at all. And so I'm just learning by, again, trial by fire, which has been all good because the market's been exploding, but now the market's not exploding. It's going to be fire.
When I was broke, I had rich habits. When I was broke, I had rich habits.
All right, let's get back into it. Master Keys Podcast. I'm Chandler.
I'm Neal.
If you are somehow just stumbling upon this for the first time ever, we are a podcast about real estate and everything surrounding real estate, which means it gets into a little bit of economics and sometimes a little bit of politics or just whatever's going on. But we focus on real estate here in Atlantic Canada. Am I missing anything in there?
No. Did you watch the debate?
I did watch a bit of the debate. I was like, are we not going to talk about the debate? I was thinking about that.
We're definitely talking about the debate. I mean, we're not allowed to talk about politics or COVID or any of those things because we just get sent to the bottom of the netherland of podcasts. But I just watched the highlights. It was funny. So I knew it was on, was it yesterday? 2 days ago. 2 days ago. But it was at like 10 or 10:30 or whatever. And I was like, all right, I'm not staying up for this. I'll watch it tomorrow. And then people are talking about it. And just the way that people talk about it, it's like a reality TV show.
Oh, 100%.
So like she went over there. She grabbed his hand. She put in force when she shook his hand to start the thing. Just set the tone. Yeah, he goes, yeah, have fun. And then he's like, you just got to watch the highlights. He was talking about eating dogs and shit. And I'm like, this is reality TV. How is this a presidential debate where like the lines are, you got to watch the highlights. He was talking about eating dogs.
So literally I'm like, oh, I wonder how this is going to go. And it took zero time. It took zero time because they walk out and he basically...
You're on that same tip. All right, no, sorry.
Oh, he basically goes over to his podium in like an awkward... And she did the traditional, you're supposed to walk up, have a handshake at the front.
Yeah.
And he clearly didn't. And you can see for a moment she was like, okay, am I going to snub back or am I going to power through? Like there was a... And she powered through and she went over to his podium and shook the hand. And he said, like, it was something like, hey, hi. And he goes, have fun, is what he said to her. I asked my wife about
would you
this.
say that was a Camel power move?
I wouldn't say it was a power move at all, but I thought it was a classy move. And I guess, which could be conceived as powerful in this messed up dynamic. But yeah, I thought it was a classy move, like shake the hand. And I think it also caught him off guard because for someone who is, I'm like, oh, what did he mean by have fun? I think he was a little, not surprised, but like, it looked like they weren't going to shake hands. And then when she did, I think he didn't know what else to say. And he said, have fun. It is, neither one of them I thought were good debater at all. They had like their basic strategies. And I think probably from a just energy dynamic, she probably won the debate. Do I think she changed any minds or came off especially impressive? No. But neither did he.
Did you see the polls?
No.
It's like 51-49 for Trump. Like, no, it was like less than that, like 49-48. Like, it was like...
That he won the debate?
Yes, he won the debate by like basically 1 point, which is surprising because it was more landslidey before. But I was also thinking, I'm like, Trump's been getting off easy. Like, in the highlights I was watching, they were showing him against Biden, and Biden was like, and then Trump was like, we don't even know what he's saying.
Yeah. But I thought he missed some opportunities on that until later when he was like, she's been there for 3.5 years. Because her thing is like, what's your plan? What's your plan? What's your plan? And realistically, I don't know if you've ever seen a debate. They don't roll out their actual economic plan. They say, we're going to do this. It's all really high level talking points. So him saying, I'm going to cut taxes. I'm going to make it easier for corporations to do business. I'm going to, secure our border. Like, that's as much of a plan as you get from any politician. But she kept hammering that.
But that whole debate is not about actually getting at the plans. And that whole debate is about just trying to convince people that you're the one.
Yeah.
And they're doing that. People are watching more for the personality traits and the overall environment than anything they say. They could be up there promising, everyone just assumes everything they say is a lie. Like that culture is now there. So anything they say about cutting taxes, promising unicorns, like I feel like no one watches that. They're more just trying to see what the stumbles are. And like, I know Kamala was playing the cards of like figuring out where Trump's ego lied and would like poke him at that. So she's like poking at his rallies, like, oh, like nobody comes to your rallies. And he's like,
and then he would miss an opportunity to respond to a valid point.
Because then he would start going, he's like, your rallies suck.
We have the biggest rallies. Like, I think it was, she would have prepared for a couple weeks, as one would be expected to do.
He showed up last night.
He did not. And I think...
he's like in the car, like, where are we going?
Yeah, I think he will probably look back and I was like, oh, I probably should have prepared a bit more. I mean, even the opening question, which was, gosh, it was a dream open first question for him in that they asked Harris, do you think the average American is better off today than they were 4 years ago? And she went on this tangent to basically just flat out not answer the question.
Yeah.
Not answer the question.
Never do.
But she kind of put in a couple things that baited him. So by the time it got for his chance to rebuttal, all he had to say was, she didn't answer the question. Everyone here listening knows she didn't answer the question because the obvious answer is that every single American or en masse were significantly better 4 years ago.
Yep.
And that is the ultimate commentary on the job she has done while in office.
Yep.
But no, he got on to some tangent about something else because he didn't like something she said. And so he missed a couple of these opportunities to actually debate and to actually make an impression.
My point.
Because she baited his ego,
she
for
kept
sure.
baiting his ego, which was smart on her part.
It is a very hard thing to run successfully for re-election. And I know Harris isn't running technically for re-election, but in some sense, she's the incumbent, right?
Mm-hmm.
It is very hard to win that when your economy is this bad, right? When people are struggling this much, when you have this much inflation, it is hard to win that election, right? As much as, you know, I'm critical of Trudeau and I don't like the Liberals, just in general, like there's a reason, you know, they're just not going to be able to win with the Canadian economy where it is and all this stuff. And that's by their own doing. So I'm not saying that, but like as an incumbent, because the one thing people can say is, well, you've been there and you haven't done the changes. So anything you say, the obvious question is, well, why haven't you done that already? If this is such a great initiative, why haven't you done it already? And that's all he needed to say for the hour, 2 hours, whatever it was. And I think he missed the opportunity to do that. Even at one point, she said something like, well, when we took over from you, there was historic unemployment and I can't remember what it was, historic unemployment and a failing economy. And all he had to say was like, you mean when you took over in the middle of COVID?
Yeah.
And he missed that because again,
she said something.
I think she said something about you know, the insert like the raid on the Capitol, and he just went down that or whatever. So I think from a pure debating standpoint, she won because she rattled him and she got off the hook with stuff while hooking him on other things. But I don't know that debate or changes anyone's opinion of who they're going to vote for.
I think it did.
You think so? Okay.
I think so. I think the way that's being taken, because everyone's taking it as a win, because basically Trump slaughtered everyone he's been up against because he's played all sorts of weird cards that no one ever expected. They're like, you can say this? And so now for someone to come in and kind of rattle Trump's cage, I think surprise people.
Okay.
And like he's been landsliding Biden, right?
Yeah.
So I think the fact that there was someone who gave him some sort of rebuttal and was able to play his game caused people to change their mindset. I genuinely think so.
If the Republicans lose, their biggest regret will be that they debated Joe Biden so early, because that train wreck of a debate literally made the Democrats pivot away from Biden.
Yeah.
Right? If they had held off that debate,
could have dragged him on and made it an easy win.
Him on, because it's the weird thing, like you want to trash your opponent, but the last thing you want is for your...
If it's an easy opponent,
it's an easy opponent. You want them to run that opponent.
Yeah, you let them have a moment.
Exactly. And I think if they lose...
I don't think Biden could have stayed. I mean, his health is zapped.
I totally agree, which is probably why they should have let... If you're a Republican, you should bring him on.
Yeah, I guess. But right? I just mean, like, I don't think he would have even physically lasted. Like, I don't know if it had to do with the debate.
I think the Vance-Walz debate is going to be fireworks.
Yeah.
Because this is both of their opportunity to really make an impression. They're both more, not compared to Trump, but they are both more excitable personalities in general. I know Trump can get rallied up, but I mean, if you put the two together,
she seemed excitable too.
I know, but if you put the two of these guys together, like I think it's going to be fireworks. I also think they're probably better debaters than those two were. I don't know, but I'm excited for that debate. There's also obviously big question marks of both on either sides of the line.
Yeah.
So, you know, they're both viewed as radical in their own ways. So I think that's going to be a
When's that?
I don't know when that debate is. I'm not sure. Just switching, man.
We got to get into real estate.
Okay. But the Mark Carney appointment to the Liberals, like the Liberals are preparing their next leader.
I have not.
So this guy's been kind of talked about as like waiting in the wings of the Liberal Party for a while. And when people were, some people were calling for Trudeau's head, effectively, the person they've always lined up is Mark Carney, who he's got an insane resume. So he was governor of the Bank of Canada.
BOC governor.
Right. And then he was the governor of the Bank of England. So
okay. All right. Kind of like this guy.
Easy there, Biggery. I'd look into it a little bit more. But, bringing him into the fold, they are succession planning in the Liberals. Anyway. Well, all right. That's enough of that.
But. Yeah. No more politics. I just started going down the rabbit hole. Okay. So today we're doing a podcast about property management.
Yeah.
And debates.
Yeah. We're going from high level political to like the nitty gritty, because there's nothing more nitty gritty to be a landlord.
More gritty than property management. Yeah. Before we get into that, we'll do a couple headlines. Do you have any headlines?
Let's hear it.
Get some headlines?
I think I probably got a little something. But
okay. Well, for me, the first thing when I open up the news and like I'm ripping through all the headlines, like the first 5 is every different news source being like balanced market, low rates, low prices. We see a good market opportunity in the fall. And I'm not just saying this as a realtor, but it's interesting. And I've seen some articles being like, this might be a once in a generation opportunity to get in again because rates are low and prices are chill.
Oh, an agent wrote that article.
Oh yeah.
Once in a generation.
Do you agree, or do you think there's downward pressure to come?
I think there's downward pressure to come.
On single family?
Yeah.
Due to the fact the economy is going to hurt?
Yeah.
Got it. Okay.
Because people are already asking me this. And
are we at the intersection of rates and the economy, or is it the intersection of it continuing to go down, of prices continuing to go down?
So the conventional wisdom is rates go down.
You sound like me now.
Well, it's just I'm just trying to like take the temperature of people out there.
Mm-hmm.
You don't just need to get approved for the mortgage. You also need the down payment. Mm-hmm. You also have to feel comfortable about your cash flow situation. I don't know a lot of people that feel really good about their cash flow situation right now. And if you don't feel great about your cash flow situation, chances are you don't feel great about your savings.
What about the 3 million people that moved here in the last 48 months that have not been spending money like locals and or working multiple jobs, living in 6 people to an apartment, saving cash?
We're about to
own property.
Elect a government that's going to shut that faucet off.
Yeah, but it's not the people that are coming; it's the people that are here that have been here for a couple of years and got to get established.
I mean, that'll depend on how they handle the change from temporary to permanent citizen here, and if they change that stuff around, right? Like, there was someone who recently came to the country, and within like 10 months was a citizen, and then tried to go down to the States and create a terrorist, and to do a terrorist attack.
Yeah,
like we are going to change those programs.
Yeah,
like the Liberals have already started doing it, and I just think the Conservatives are going to cut that stuff way down. If you look at the
the stuff that's already happened, the people that are already here,
I understand.
Majority of it already came. Majority of people already came. They've already started making cuts like that. I don't doubt.
Yeah, I think also, at the risk of generalizing, a lot of those folks, they're saving good money. They don't necessarily have the on paper income to support a lot of the Canadian prices in this country. And we know they are predominantly moving to major markets. Mm-hmm. We would be one of the more affordable major markets.
Mm-hmm.
What's our average home price right now?
$550?
Probably higher than that.
$570?
Yeah, something $570, $585. I don't know if they'll all get approved for that amount.
I'm now having couples with 2 jobs that's where they come in at because rates are back to getting a more chill place. Okay, I'm going to throw it out there then too. Like Warren Buffett, one of the greatest investors of all time. Brad Jacobs, also a very, very good investor, going in heavily on home building companies and home construction supplies. They're selling everything else, but they're dumping it all into home construction. And they're literally openly talking about how they're going to continue to dump into home construction.
So you think that's because they think there's going to be big money to be made, like prices are going to go up, or they think they're going to have just a lot of incentives?
Warren Buffett's known for being the best investor because he's lost all his money.
Touche. But I think they're probably looking at that there'll be ways for them to get their costs down.
They don't build. What do you mean get their costs down?
I think there's going to be a lot of government subsidies and things like that to get home building costs reduced and to try to put more affordable homes onto the market, right? Which is like, okay, kind of would suggest potentially more downward pressure, not more upward pressure. Do you know what I mean?
Yeah. Okay. So I see what you're saying.
I also think it depends on
But
what.
they don't typically subsidize it like that, though. They typically subsidize it by doing like longer AMs or mortgage incentives.
Yeah, or
'Cause
first-time buyer rebates or all these things. Yeah.
Yeah.
But I think that
Because I think it's pretty obvious that they appreciate that if they jam the prices down, then like shit, now everyone that's out here already feels extremely less wealthy. And like 80% of our population may have rebought and now has only got 20% equity in their home. And if we do this, everyone's going to be upside down.
some of this also depends on what timeline we're talking about. If you're talking about next spring, I don't think next spring is going to be a massive run on pricing. I don't.
I'm with you. I think the next 12 to 24 months might be a bloodbath.
Exactly.
And I think
that's
3 to 5 years is when you're going to start to see it like crisp. And like 5-7 years, things are going to be humming.
Yeah. So again, I think I struggle with any sort of prediction beyond 12, 24 months because there's so much craziness
You
in
make
this
the
world.
money when you predict long term.
Oh, I struggle to be confident with it. I'm not saying people should, take a swing. If you think that's where it's going to go, absolutely. But am I going to sit here with a microphone and say, this is where the housing market's going to be in 3 to 4 years?
This is a financial advice podcast.
yeah.
Go listen to everything Chandler says. So say it, Chandler.
I think that our market here is going to be flat and shaky for the immediate future. After that, I do think the trend is upwards. I don't know. If you look at history,
it's always a great time to buy. It's always a great time to sell. Call us.
I think over a long enough timeline, it was always a great buy, is what I will say.
I have 2 asides now. Well, 1 aside, but I don't know if I want to.
I thought that was a nice little sound clip, and you just let that wash over.
What was it?
Like on a long enough timeline, it was always a great time to buy.
Oh my God.
And over a long enough timeline, it was probably a bad time to sell. That's a good little soundbite. Think about it. Like there's some truth to that.
I guess, but if you compare it against other investments, probably not.
Well, yeah, we can get into opportunity cost. That's why,
So, okay, because we don't have a ton of news, I'm going to put out 2 things.
I got something interesting though too.
Okay, well, I was going to say, this was an interesting conversation I had with one of our listeners. Shout out, you know who you are, yesterday. And we were just talking about the home stuff. And I was asking him the same question because that's what I do when I'm trying to figure something out. I ask every single person in every industry this question. And it was about what I just asked you. And he did the same thing. He's like, the house prices are just so damn high. He's like, these Newcon homes are psycho. But then I call guys that are building them and they're building them for $160 a square foot or even less. Like guys who get it down to a science. I know guys that are telling me they can get it done for $100 a square foot. But I know, like, I have some buddies that are just like,
that can't include land though.
Well, so this is the problem. So you get a 2,000 square foot house, which is a perfect home. That like 3 bedroom, 2.5 bath.
So it costs $350 to build.
$320. Like it's insanity. That's all in $320 to build that thing. But if you go looking for one of those houses right now, you're paying $700,000. Okay. So even if you said $350, like you said, the problem is, he's like, look, the problem is I can't get a piece of land for less than $200,000, and I got to pay your damn fees. So he's like, that's $250,000,
and carrying,
and then there's carrying all the other things. But realistically, those homes can be had. Like if that price was coming up at $350,000, $400,000, or $400K, they'd be pumping out. There'd be no carrying costs. Those things would be pre-sold. You literally just hand the keys over every single day. So I'm sitting there going, okay, land's the problem. And I've been here before, and we've kind of talked about this before, and I've gone through it a million times. Condo modular home communities. How the hell, like, aren't people not going to subscribe to that at some point? Man, think about how good it would be. Because you save a ton on the land, okay?
Why are you saying you save on the land? Because you can densify it a little easier?
You can actually do the development in a way that makes sense, potentially. You don't have to spend $1 billion on the roads. And you can actually lay them out in ways that, like, could be kind of neat because you don't have to follow all the rules associated with regular subdivision of land.
Cluster housing and condo housing, I think, is going to be a key part of.
And the sick part can be, you can do, the other thing is, like, okay, this is where, things have gotten messed. Right now, like, you have to put in these roads, and a big part of the cost is bringing in the water and the sewer. So now you're spending $50,000 a house to put in water and sewer. And I'm like, dude, it's cheaper to get a well and a septic. What happened to the fact where now, like, the idea of doing a giant system as a group should actually technically reduce the cost, but everything's gotten so inflated by the contractors that are putting it in that now it's more expensive to run a group system. It's cheaper to run your own independent well and septic system. Yeah. Like, this is how you know the system is flawed. People are screwing it. And so I'm like, if you put in a shared well and a shared septic on 10 houses, it would be dramatically cheaper than pulling in the services that the city's giving you. Yeah. And it's not because the city's charging a lot, but it's also because the contractors that are licensed to do it are absolutely hosing you, right? And so it's like, you can go in now, you can do shared well and septic. Your roads can be put in like different private lanes. They don't have to be nearly as crazy. You can put in sidewalks. And like, you look at the ones in the States, they actually make them really nice and really cool. And so you pay $350 a month. Even if you pay like $500 a month, if you say okay, would you look at what they do? They always throw in like landscaping. So then everybody's house is landscaped. And so the crazy part is I thought, okay, like typically when you pay these monthly fees and the place is worth less. In the States, it's now gotten to the point where it's more expensive to live inside one of these communities. On average, 4% higher. Because you know what? You know that the house is going to be maintained. You know the house is going to have the lawn mowed.
Get a little gated community going.
You can, can't, or at least in Nova Scotia, you can't throw up gates. But like they can actually monitor and maintain what's going on within their neighborhood versus now like you go to neighborhoods and it's weird. Like one of my buddies wants to buy a house like close to West End here, which is becoming, it always kind of I guess was affluent a little bit and it's become more and more as time's gone on.
Yeah.
But the difficulty is like it could be like $1 million house and then there could be a shack right next to it still because of the age of the neighborhood.
Yep.
And
it's
like
all post-war slap it up housing originally. Yeah.
Not that that's the end of the world, but it does kind of like when you pull in, you're like, does it make sense for me to spend $1 million here when this is sitting right here? Whereas this will actually keep those homes in line and order, keeps the landscaping up to par. Like, I don't know. There's just, I'm like, does this not make sense? Where people can be like, okay, I'm saving $200,000 on sticker price here by getting this neighborhood. I know that everyone's houses are going to be maintained on the exterior. Like, there's going to be other potential perks like shared amenities. That's the other thing they said. Like, a lot of people go to these because they have beautiful parks. They might have a pool. A lot of them have fitness centers now, like that are like better than, and it's like included. And so like you start putting some of the stuff together, you're like, damn, this actually isn't half bad.
Yeah, I mean, you're kind of talking about bare land condo type living.
Yeah.
Right. And there's a couple of them around. One of the more well-known ones is Seven Lakes out in Porter's Lake. It just took a while for people to understand the concept because people would drive up like, oh, these are houses. It's like, well, technically there's a bare land condo. And like, what? And it just took them so long to understand that.
Mm-hmm.
But what it was a shared like sewage system.
Yeah.
But in exchange for that, there was a shared access to a lake. There was shared green space. There was walking trails. There were all these things. It made the development so much more feasible to do and to build out. And as a result, they were able to, get the houses out there and in hindsight at like really affordable prices. I like the idea of this for infills. The problem again is still just trying to get land to do this sort of stuff on. It's getting really, really difficult because the only place you could really do this is you got to go outside of town. And I guess that feeds a need to some degree, but it's not going to really hit the affordability in the core. So like maybe we're just resolved with the fact that there's going to be parts of the cities where we're just psycho expensive and all we can hope is to make dents in other areas.
Totally. And then the thing it does is it takes some of the pressure off the core. If you put 1 million houses around the city for $300K, all the houses in the middle of the city are not going to stay at $1 million.
Yeah.
You know what I mean?
So you're thinking, just to kind of return back to it, like what do you think next spring is going to be like? We haven't really fully talked about this.
Okay. So I'm bullish on new construction, obviously, because I see all the big boys making moves. And I think the big thing to me is the population here has grown a ton. And if you look back like 10, 15 years, we were building houses, not very many apartments. It's pretty obvious what was coming.
Mm-hmm.
There was not enough apartments. Now that chart has completely flipped upside down. Now it's like 80% apartments, 20% houses. And now we've added whatever. Both places have added 10 to 15%, if not 20% of their populations. Okay. But we've only added maybe 2% of housing stock. So I'm bullish on the fact that homes are going to be in high demand. Newcomers on average like new homes. Culturally, they like to own. North American culture, they like to own. So all these things feed into the fact that new homes will do well. But to your point, and I'm learning and having gone through this now a little bit, I tend to predict way too soon. These economic cycles take time. And so when I see someone like Brad Jacobs or Warren Buffett and these guys cashing up and starting to buy these companies, they're not buying it with the intention that like, okay, within 12 months, it's going to start popping off. They're looking to start their buy now.
Right.
And they know this market's going to go down. And they're going to buy the whole way down because they're not going to time the bottom. And as it starts to come up, the second it starts to come up, it's going to be really hard to buy. Right. So they want to start buying now while things are reasonable and people are still willing to make trades and then keep buying it on the way down. And then I'd say within, like I said, 24, maybe 36 months, maybe I'd say think around 24 months, you'll start to see that turnaround. Things will start to pick up. We'll probably have rates last that long down and then it'll start rip. And I think that's when you'll see this new construction boom really, really take off. So in the short term, what do I see? I don't think it's going to be extremely positive. I think it'll be, again, I genuinely, like, as lame as it sounds, I think it'll be a balanced market because rates will be lower and there is a part of the population that's been frugal with their money and has been sidelining. Like I know I've had probably 20 to 30% of my client base, if not more, 30% of my client base for the last 18 months has been sidelining. Like they've been like, yo, I'm interested, but like, doesn't really make sense. I think those people will continue to start to kind of come out of the woodwork. And like, I'm getting a lot of texts from a lot of this sounds terrible, but like just maybe I want to say like my more financially prudent friends, like people who I know have really strong jobs, but like they've always been very cautious with their money.
Mm-hmm.
Like they're not driving flashy cars, not wearing flashy clothes. They're like they're starting to text me now, which is funny because all the people that spent a lot are kind of like, hell no, I can't buy right now. But these guys are like, oh, this one seems pretty good. It's like a reasonable price. Doesn't have a ton of offers. Like, I'm like, yeah. I'm like, rates aren't too bad. Like, I think I can get into this and just rent it out as it is. I'm like, yeah, you probably could. And so I think they might give some stability to the market, hopefully. But I don't see a ton of downward pressure. I see downward pressure on the stuff that got super inflated.
Mm-hmm.
Right? And where I've been saying, the big thing I see downward pressure on is apartments. I think apartments are going to feel the heat.
It's tough to not get swept up in the frenzy of Toronto, where they're talking about the sky falling but they're really having it hardest hit in these absurd pre-construction out of town McMansions and pre-construction condos. Two things that we kind of haven't had here.
I kind of wish we did, but yeah.
Like what we haven't had them, so we're not going to experience that sort of correction that they're having. Yeah.
Sorry to cut you off. So to your point about the McMansions, there's a few neighborhoods that I feel like are our equivalent that I think are already getting beat up, and you're seeing that.
Yeah.
I don't know if I'll say, like, to me, Indigo Shores. It's beautiful. I agree. Like, you drive around, the streets are really nice. Like, it was laid out really well. The lots are really big. Style of the homes is nice. People were dropping $1 million on a split entry in there.
Yeah. Not on the water.
Not on the water.
Yeah.
And then on the water, they were dropping $2.5 million.
I don't know if they're that high.
$2 million. I'd say two. I'd say a bunch of them was around two. Like, I guess probably when you first started at 1.6, then they all crescendoed at 2. Every single house would come on at like 2, 2.1, 2.2, 1.8, 1.9. Those?
You sound like a Fall River waterfront guy that's a little jealous.
My leg's better. I'm telling you, nobody listens. Anyways, no. But I think that, and you're already seeing it. We have clients that we sold into homes that were coming from Ontario that paid like I don't care. It was up for 900. I'll pay 1.1. And then immediately they're like, actually, I'm not coming, and I need to sell it. I'm like, well, it's worth 850. It's not even worth the 900 that it was listed for to begin with. So I think those neighborhoods are getting obliterated. Not obliterated, but they're going to take a haircut. Your West Ends, your North Ends, like they're not going to get destroyed. They're really not. Yeah. There's a few houses here and there.
Yeah.
It's some of the sprawl that you saw that take place.
I guess we also think of it from a sales perspective, right? Like I could see volume contracting, right? So my assessment of the market is not just price related, it's, transactional, right? Like I just think the number of transactions are going to be down. The challenges with the transactions are going to be, there's going to be harder transactions to be done.
Yeah.
So part of my sense of cooling is not just price wise. It's also like, hey, if you want to turn and burn something, if you want to,
money's not moving.
Yeah, exactly. I think that's going to be a lot of it. Again, I just come back to because, we've had a few rate cuts in a row now.
Yeah.
You've got fixed rates coming down to more on par with normal, but like the last time, like we had this frenzy in large part because money was so cheap, and money was so cheap because we had this worldwide pandemic. Like that is a hopefully once in a generation thing.
Okay.
So I don't know that there's going to be how much would rates need to come down to create that sort of buying frenzy again? Like it would be a lot. And what would happen to our economy that the Bank of Canada said, yeah, this is about equivalent to the worldwide pandemic when we didn't let people leave their homes. So like I just don't see, if rates get down that low again, it's because something really, really, really terrible has happened. So the rates aren't going to get there to be enough to spur it. And then you've got people paying, even if it's a 4% rate on prices that are 35% higher than they were 3 years ago, maybe 50% higher than they were 5 years ago. I just don't know that the buying power is going to be quite strong enough to maintain some of these higher price points. Again, I'm sorry, not to maintain, but to keep pushing them.
I agree.
So I think
I'm in agreement. The other thing I'm going to put out there on my 2-year agenda is I still think there's going to be international conflict. How long it's going to take to get it popped off, I don't know. But I mean, it's already going on. And I think it's going to continue to get worse. And Canada during international conflict tends to take in a lot of people. So I think during that time, you're going to have that double thing going on where you have a lot of people here that have now come here, plus a bunch more people that are coming.
So what's the play? I don't want to hear you talking about like, I'm looking at businesses, blah, blah. Real estate wise. I don't want to hear it. This isn't a business private equity podcast. This is a real estate podcast.
We're going to try and make a little bit of that. But what the hell is the play? What the hell am I doing?
What from a real estate perspective, what do you think is interesting to buy?
Well, that's a good question. That's why I'm not looking at real estate. No, in all seriousness, what's I think interesting to buy. So I'm offloading some apartments. Basically, I'm selling my nicer assets, which is frustrating, but that's the only stuff that I can sell because all my shitty stuff, nobody wants to buy it for anything close to what it's appraised for. And rightfully so. I'm gonna have to hunker down and just bite the bullet on those. And my objective with the cash, I'm looking at a couple things, but I've talked about it before. I've looked at industrial a lot. I'm still so back and forth on industrial. Like I appreciate that in previous downturns, it's held resilient. My thing is in the previous downturns, it was people going from homes to apartments. So they were downsizing. So they needed additional space to hold their crap. Now everyone's in apartments. So I don't see how, like if the economy goes down and people have less money and they're already in an apartment, how they're going to just now need to get a storage locker. Like that doesn't add up to me. So I'm less bullish on the storage concept. Additionally, like I'm having tried to step into storage a little bit. Like the players that are in there, they're beasts. Like it's like your U-Hauls and your Bluebirds. Like these boys just come in, they buy 50 acres in prime locations and just put up 1,000 loggers. Like they don't give a shit.
Yeah.
So anyway, storage was something that I feel like everyone kind of looks at and gets excited about. It seems decent. The nice part about it is it's cheap. Industrial warehousing, I think as the whole economy slows, I don't think it's going to be super exciting. Office, I actually still think offices can be kind of good if you get the right types. Like I saw Armor Group recently bought a medical office. And so in Canada, medical everywhere, medical always pays.
Yep.
So that was a smart play in my opinion. And he's saying like you got to run it like a business, not just as an investment. And so I think that is a big part of it if you make the office interesting. But a lot of companies are forcing people back there. So I'd love to get into office and try and play that. But again, it's so risky. I'm trying to fully understand that and see where that shift is going to be. So on the real estate side, the things that I would probably do right now, home flips I would also avoid because to your point, I don't see how people are going to have those high sticker values. I would do home flips if I'm buying a house for like 150K and I need to sell it for like 400 because you're in that price point where it's like it moves. Mm-hmm. You don't need to do super high end finishes. You just need really clean, tidy, like structurally sound homes. I think building too can be good if you can get the land and build for cheap. But again, that's almost impossible. Internal conversions, I think, are still a great way to keep the wheels turning. Okay, like they just upzone the city all over the place. There's going to be houses that are going to be sitting that are going to be on lots that allow them to do 4 units internally or 8 units maybe if you do want to do an addition. But I'd probably just do the internal. It's a little easier in my opinion. Well, maybe not. I just haven't done a lot of build new, but those are great plays. Okay, in my take, you can get in. You don't have to borrow a ton of money. You like the rentals aren't crazy. You jam in the units and the lifts are usually huge, man. Like you're buying a house for $500,000. Once it's a 4-plex, it's $1.6 million. So you know you got a bunch of
$1.6 million.
400 door. Yeah. I mean, if you do it on the core, you're still in the peninsula.
Right.
Like
okay.
You're putting in 2 bedrooms, maybe 3 bedrooms, a floor. Like it's a house at the end of the day, right? Like the floor plate of a house.
I only think in Dartmouth terms.
You're putting, you see a triplex that's a resale triplex that's renovated going for $1.6 million down in Dartmouth. So this is like, so you do that and your floor plate on a house on average is 1,000 square feet at minimum, if not bigger. So realistically, 1,000 square foot condo would be 2 bedroom plus den. Do the same thing. 2 bedroom plus den plus 2 with 2 bathrooms. So do the same thing on each of those floors. Like you're going to have nice units that you can rent probably for $2,400 because you're in a good location like that. Those will still play. And so I think those have such huge lifts and they'll keep the money moving. It's like, well, if you do one of those a year, you pay yourself $200,000 a year. And it's like, that's a pretty strong income, not a crazy stressful life. So that's one thing I would look at. I scream about it all the time. I'm getting more and more serious about the States. I've been talking to people down there for the last 2 years. I've been told they're starting to see some haircuts finally. That's been my apprehension is they had a ton of growth. And so I just wasn't making the move down there because I went down there and like, yeah, 180 a door. I'm like, oh, it doesn't seem too bad. And like, yeah, there were 95 a door 2 years ago. And I'm like, oh, damn, this is the exact same as Canada. Or everything's now doubled in the last 2-3 years over COVID. Yeah. So it didn't make sense, but they're starting to be like, I got a call maybe a month ago, maybe 2 months ago now. And he said he's looking at a product that's 25 to 35% discounted from the highs. And he expects more downward pressure. And I'm like, okay, good. Like that's something I want to start looking at and see the opportunity there. So starting to look at alternative markets temporarily. But I know you're joking about me about like getting into private equity and investing in businesses or lending and stuff like that. But the reason I did that, it's not because I'm like, oh, this is so exciting. I just want to add more things on my plate, blah, blah, blah. It's because I started to do the math. I'm like, if there's any depreciation in rents or value in my buildings and the cap rates start to go up, like I'm losing money. Even if technically I'm cash flowing on a monthly basis, I'm losing equity growth and value. And I actually hit a stronger rate of return by just parking my money and lending it out. Look at Warren Buffett. Like people are like, are you just holding cash because you get a stronger rate of return by actually holding your cash? And he won't say yes to it, but basically that's what he's doing. Like he wouldn't sit on $400 billion if there was something, you know what I mean? And like it's in basic like GICs and bonds and stuff like that. And so that's also kind of what I'm doing there with that as a bit of a hedge. And then combine that with, and to be clear, like I mean, it's in and out. Like I have to use it. Like right now I have huge projects on my plate. So right now it's out, but ultimately I want to put more back into it. And then looking at these active businesses, cash flow is going to be super important right now. And I don't see, to your point, I don't see cash flow as selling real estate sales, right? Like there was a window there where if you could breathe, you were making big money selling real estate, right? Literally, everyone was getting their license and making 250 grand a year. It was just like, what's up? Let's do it. And so that's not going to happen anymore. Now you got to hustle. And like, I'm like, if I'm going to hustle, I'm going to look at other alternatives. I got fortunate. I was able to make some money during that time. And I want to see if I can buy some businesses that have management in place and operate in a way that can subsidize that cash flow or completely replace that cash flow. And I'm trying to find businesses that are going to do well during recessions. Again, in Canada, that's things that are like health related, government related, or like service and need related, not like, you know what I mean? Not for those things. It's funny right now, I look through a lot of businesses and it's like high-end clothing retailer for sale. I'm like, that's going to zero, man. Like no one's got any money. No one's buying any high-end clothes. So all to say, I know it's a real estate podcast. I think, I mean, there's still deals, but I think some of the big stuff's going to come to earth. And you're already seeing that with some of these bigger like multiplexes and stuff. The prices are coming down, but we're in an awkward period where buyers aren't willing to pay and sellers are still not willing to cut their price. But I keep saying,
the ladder's the thing. Yeah.
I keep saying, I think these sellers need to just shut up and sell, because I think you will be pissed if you don't, because sooner or later you're going to have to come down to earth. Guys aren't going to keep putting down 35, 45, 50% down payments. Like they're just not going to. Mm-hmm. The cash is drying up because they're not getting it on the refis either.
Have you seen some, like on a smaller scale, like single family duplex, small scale multis? Have you seen some decent deals out there yet?
Yeah, ish. Well, not if they're already converted. Not really. They're not great, but I'm starting to see stuff that's not bad. Like there's one down there in Dartmouth. It's a duplex, and like I ran the numbers with my buddy, and I'm like, because he was like, well, I don't really want to leave my apartment. I'm like, I ran the numbers with him, and I'm like, you'll be paying probably the same or less to buy this, and you own the place, and you'll have a 2-story apartment in the back of it, and live in a live-in unit. I'm like, I think you're actually doing pretty good, and this location's bomb, and it's where you want to be. Like it's better than your current location. So I'm like, this kind of makes sense. If you have the down payment, like 10% down, this makes sense.
I for the first time in a little while, I have seen a couple properties of like, that's actually a pretty good deal. Like not just from a house, it's a nice place to live, but like from a little investment standpoint. Like my sister, she owns 3 little houses here in Dartmouth. I don't know if I've ever talked about this on the show, but my sister lives in Toronto. She can't afford anything there. Years ago, like my family is not involved in real estate. It's not something that I grew up with. It's not something that was talked about. So it took years for them to kind of even really understand and trust what I was doing. Yeah. But now, you know, my parents have seen the success of it and they worry about my sister not having anything. So about 5 years ago now, they're like, oh, we're going to, like, we need to help your sister get something. She can't get anything in Toronto. We're going to get something, help her get something here. And their original harebrained scheme was that they were going to buy something in Bedeck at Cape Breton, because that's where our cottage is. And they're like, oh, and you know, we can take care of her. I'm like, that is a terrible idea. Like, that's a terrible idea.
35% vacancy.
But they were like, well, then what should we do? I said, I remember saying this. I was driving with my dad in his vehicle and we were turning onto the bridge. And I said, what we should do is we should buy we should buy the cheapest little homes that we can find in North End Dartmouth. That's what we should do. And we got 3 of them before the market went psycho. Mm-hmm. So for perspective, the first one we bought was $170,000, give or take. This was fall 2018.
Mm-hmm. Great year.
And then we got one, which is semi-detached in the spring or like early 2019 for like $215, and then bought the adjoining property next door for $245. So we got 3 in, and then it went psycho.
Yeah.
Right. COVID, full craziness, blah, 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 blah. But the other day, I saw a property that fit that exact same mold. And that's a different sort of investment. People are like, well, that's weird. It doesn't really cash flow, blah, blah. My sister's priority is not to cash flow. My sister's priority is to build a nest egg because she doesn't have that opportunity. She's not going to collect a pension because of what she does. And it's not, a super high earning job. This is a very passive net worth, something to, retire to one day. And for the first time in a long time, I saw a little house that part of me was just like, man, that would be the exact same thing. Mm-hmm. Right? If she was doing that today, this would be the house we would buy. It breaks even on rent. It's in a great high lift area, and we would just set it and forget it. And she's a good payer downer of stuff. That's all she does. She's not going to refinance. She's going to pay that sucker down. And I saw one of those for the first time. I also know the duplex you're referring to, and I think it's a phenomenal property.
How is it not sold?
Anyway.
Oh my God, I'm gonna text my guy again here.
It's a phenomenal property. I've shown it multiple times, and it keeps coming down in price. And anyway, this is the first time in a while I think, like, are these home runs? No. Are they crazy flips? Are they 7 units? No. But depending on where you're at and what you're looking for, I think they're great buys.
Mm-hmm.
I also think there's something to be said for buying single family homes that are great deals because you get them vacant and they appreciate with the market. They're not totally reliant on income. So I've always thought if you just want to be that person, there's a few low-key multi-millionaires around town that all they did was buy like 7 or 8 little single families and duplexes. And you know what? They're chilling. They're not like you and I. We're going to talk about property management here if we ever get to our goddamn topic of today's episode. Like, they're not running around dealing with this psycho 80 to 100 tenants, and all this crap. They got 7 properties, maybe,
$1 bazillion in debt.
Like, yeah, they're not in big debt. Like, they've got a lot of them. They can pay them down.
They probably still have all their hair.
And the equity grows up, even if the cash flow, because their equity goes up with the overall market, not just solely based on the rent. We can only raise our properties based on rent, which means, to your point, you're talking about, I think rents might roll over. Our properties are going to be worth less, right? Just because rents go down, house prices don't go down, right? Off. So I was looking at this house. I'm like, man, my sister, she doesn't want to buy another property, and it sucks for me because I end up being the one that manages them all. So I manage her 3 properties here. But I was like, that is a solid little buy it. It's a great house in a great area. You rent it and you just let it do its thing. And so it's been nice to see a couple of those kicking around.
I agree with you on everything. The only tough part, and you saw this a little bit in Ontario, most people buying condos, selling it and forgetting it, is even in that position when that rate renewal comes up, some people did get hooped.
Because the cash flow, or you think value. Yeah.
Cash flow.
Listen.
Values are going to go down too, but again, you hold it for long term. It's not the end of the world. But it's the cash flow. If you have 10 of these now and everything's great, you're making $300 a month on each of them, and then all your renewals come up and now you're losing $500 a month on each of them. And it's like, if you were really good and you saved all your money, there's a chance there that you're going to be okay, but it's still going to hurt every month to have to pay out $5,000 or $6,000 a month.
Totally. And I guess I would look at that kind of a couple ways. One, I don't think, you can only worry about the rate cycle so much because it's so hard to predict. Yeah. Right. So you can't solely make your decision on, what happens 5 years from now when I renew?
Totally.
It's like, you hope if things get really bad, it's really easy to sell a single family home.
Yeah.
Right. Especially after 5 years. You've got some equity in there. If it's really so bad, you can cut ties with that sucker pretty easily.
Yeah.
And over that 5 year, you're going to make out okay.
You learn which ones you like, which ones you don't, sell the one you don't.
Yeah. And you're going to get some lift in your rents over that 5 years, even if we're talking about rents rolling over. I think there's a lot of protections against that. And you have one tenant to manage, and that tenant mows the lawn themselves.
I wish I bought 100 houses instead of 100 apartments.
Are you being serious? Some days.
Some days, definitely.
Yeah. But I have one quick thing before we turn to our topic, because we are going to talk about property management today.
But I don't think we're going to cover it as much as, I got a lot of shit here.
Okay. Well, screw that. We're doing that next time.
Okay.
I want to throw one thing at you and get your reaction, and because you're a big math guy. So think about
I'll talk about my experience in property management as a segue to carry people in.
Think of you got into home ownership early.
Good math.
Right?
Yep.
But think about a lot of our friends and who pay rent until they buy, right? Maybe aren't fortunate enough to live at home, couldn't buy something early on, but they rent for a period of time. The average American pays $330,000 on rent before buying their first home.
Okay.
I don't have a Canadian figure. What would you think that would be like in Canada?
Almost the same.
Okay. Can you break the numbers down a little bit? I'm putting you on the spot with a lot of mental math here.
Well, the reason I say almost the same is I look at an average of $1,500 a month in rent.
Okay.
Which I think is fair because a lot of people either split an apartment or if they got an apartment before, back in the day and they're still in it. So every year it's $18,000. So say $20,000. And then average buy is around 30, isn't it? Or is it older than that?
It's probably a little bit older than that now.
Okay, so say 33. So that's 18 to 33. It's an average of 15 years of renting. 15 years of renting at $20,000 a year is $300,000.
Yeah. I was surprised by the number because I thought it was a little bit high, but I got to like 200 and 250 real quick.
Yeah.
You know, I was trying to break down like, all right, while you're in university, you're paying $800 for your room, right? So you're saving a little bit, and some people are maybe staying at home. So I felt good about that number, but that's $10,000 a year. You do that for 5 years.
Yeah.
Easy.
Yeah.
Right. And then to your point, like I see a lot of buyers around 31, 32.
Mhm.
So that takes you another decade. And at that point, you're at least averaging the 15,000. So that's 180 for that, 10-year period plus whatever you paid in university, which is 50. So I get to 230 in a heartbeat. Isn't that wild?
It
seems like
is.
a lot of money.
Does it seem like a lot of money? Because if you think about it, so you do a $300,000 house, or $315,000 house, you do 5% down, you're paying 4%. The average is 5% interest. We'll say 4% interest. So 4% on $300,000 is $12K a year in interest. Then you're paying your property taxes. Here, that's fucking $20,000. But we'll say $3,500, $3,000 for the average. Then you're paying property insurance, which is another $1,500. And then you got maintenance, which is at least $500 a year.
Yeah.
Let's say at least. So now you're at $17,000 in expenses. And utilities. But we'll forget about those because we'll assume we didn't include them in rent. So I said $18,000 a year for rent. So in that same time frame, you're spending on non-redeemable expenses. Now the idea and the big difference is that hopefully that $300,000 house is now $600,000.
Autonomy and blah, blah, blah. Yeah.
But the other part I'm not including is on top of that, you also had to make the principal payment on your mortgage, which was also another $1,000 a month. So you're feeling, even though your growth is there, you are feeling $1,000 a month less cash flow. So you have to live a different lifestyle for those 10 to 15 years. And that's the other thing that I'm like, I get it. I totally get it. And I'm like, yes, like long-term wealth creation is really, really important. But then as a young person, it's also tough. It's like, man, am I going to suck $1,000 a month out of my account that I could be using to maybe go on some trips, go do this when all my peers are doing it? And you get mixed signals, man. Like it's funny, man. I talk to everyone. This is my classic. I ask everyone about everything. You know this. And it's like half the group's like, man, travel, live life, do this, make sure, don't rush into a partner, don't do all these things. Then the other half is like, dude, you got to save. Like, what are you doing? Focus on your career, build your base. Like, you'll be so happy when you build your base. But then there's the other half of the people that were like, no. Like, still try and build your base. But like, man, go do some fun shit because you're not going to do those things when you're this age.
You know what? Literally when I was doing that, because I did that math in my head, I'm like, man, that's so much money and blah, blah, blah. But then when I just said it out loud, I was like, so from 18 to say 32, 14 years. And they spent, by my math, kind of like $250,000 on living expenses on a roof over your head. Like, that ain't bad.
That ain't bad at all.
Yeah.
That's what I mean. Rent. Everyone's got this weird, because here's my other thing. So you do all this and you invest $1,000 a month.
Yeah. Well, yeah.
Okay. So you invest $1,000 a month at minimum, you're going to end up with $180,000. That's assuming no compounding or any growth in any of your investments. You're telling me that $300,000 you made on your house, you can't potentially turn that 180 into $300K over 15 years in a basic investment?
That's true.
It'd probably be pretty damn close.
Yeah. And
it's more liquid, accessible cash. There's less stress because you don't have to maintain your property. You're never going to get hit. The other thing is like $500 a month. We never hit you with the moment when, oh, guess what? It's $20,000 because all your windows have to go. It's $10,000 because you got to do a roof. It's $5,000 because something's leaking in the basement.
Stop trying to convince people to not.
And when you're renting, you can get. I gotta fill my apartments.
I'm trying to sell here, bro.
I gotta fill my apartments. Like in apartments, you can bounce around location. You have freedom. You don't have to stress.
Well,
everything breaks.
in more balanced markets, in
more balanced markets to an extent. But like you do the stuff that I see my buddies like. You know what? I see this guys who if you go out and you find a friend or whatever, and you hustle and you can find stuff. Like I'm like, okay, where does it make sense? Guess what? The market here caps out at $3,000. You're getting banger houses, beautiful big homes for like $4,000 a month. You're telling me you can't live with one other person in a big 4,000 square foot house with 3.5 bathrooms for $4,000 a month? You're gonna pay
looking for a roomie.
You're gonna pay $2,200 a month to live in a shitty apartment when you could live in a house. It probably has a double garage. You can each have a space in the garage. You live in a full house for $4,000. Like this is what I mean. And there's so many options in that wheelhouse. Like nobody looks over $3,000. Nobody's looking. And I'm like, ladies and gentlemen, like, and a lot of them already have a roommate. I'm like, just look at the higher end of the spectrum, and you're gonna find some great stuff.
Yeah.
Anyways, all right.
Mike, can I fire one more thing at you? Because I thought this was.
I have a funny one that relates to this before you give me that because you're pulling it up. Okay. So J-Lo and Ben Affleck.
Oh Jesus. Okay. Not where I was expecting.
They were a unit. They're no longer a unit. I don't know if you've been following this.
Well, she's still a unit. Jenny from the block. Give me that Jenny from the block. I don't like
she's
this
mid
new
50s,
J-Lo.
eh?
Damn.
I don't know
You know
what
what she
they
annoys
feed them when they have that much money.
Oh, to me though, I cannot stand her.
I don't know
but
anything
she's
about her, but
a good-looking person.
she's a beautiful lady. Anyways, they're splitting up. Okay. And in this split, they got a $68 million pad to deal with. $68 million US. So basically a $100 million pad in the middle of this in Beverly Hills. They took a mortgage. What do you think their estimated monthly obligations are with a down payment of $50 million? What do you think their estimated obligations
So they
are?
only owe a mortgage of 18 mil?
20 mil.
20 mil? All right, 20 mil.
With their property taxes and utilities and like all the housekeepers. What do you...
With their housekeepers?
Well, not housekeepers, but just like running that house. Just running that house. What do you think the expectation is to have that house sitting empty to just keep it alive? What
$230,000 a month.
Nice, good guess. 280,000. Well, I mean, and they don't know. It's all speculation, but they're estimating $280,000 US a month. JLo, if you're looking to rent a house in Halifax by any chance, I will rent any house you want with you. I'll cover all the rent.
I should have moved to Massachusetts and just somehow befriended Matt Damon back in the 90s. I think we would have hit it off, man.
The boys.
But I don't know.
All
Ben
right.
doesn't seem too happy with life. All right, this is mine because we talked about this on a different episode. You know, I've been obsessed with AI music generation. If you
I
follow
know.
me on social media,
You've been getting bombarded with some weird stuff.
you have been seeing AI music generation. A man is charged with a $10 million streaming music scam.
Mm-hmm.
What he did was he used AI to generate a bunch of fake songs and fake bands, uploaded them to streaming services, then created a bunch of bots to go and stream those bands and that music nonstop. And he generated $10 million.
Respect.
Respect, big respect. I love the hustle.
Yeah, I love the hustle too, man. Like, respect on that. That is, don't hate the player, hate the game. Like, you guys set up the systems. He just followed them. Like,
And here's the crazy thing. I guarantee you he got caught because of the irregular streaming patterns, not because the music sounded fake. He was able to go out there and create multiple fake bands with fake songs and just mass populate them to these streaming platforms. And no one noticed that the music was fake. But they eventually noticed that the listeners, because he then set up a bunch of bots to just play that sucker on repeat.
can we do that for our podcast?
I mean, I guarantee you people do. This is how half these influencers online have that many followers, but no views. It's the strangest thing.
I know. They're getting more clever though. They started to buy views because that was like everyone's starting to call that out. But to this point, like, well, it's a good way of making another down payment.
I mean, hey, I think you can
The
do
only
this on
thing
a
that I
micro
think is a
scale and not
negative
get caught.
is 100%. There's guys who just like I'm making 100K. You're doing this.
Well, like 1 million streams is $4,000, right? US. So it's like, could you maybe just like
Do a couple
pump a little
million?
in there and be like, all right, I'm just gonna pick up like
Is there-
100,000 streams.
Is there a point where, because when you start getting the streams and your music gets promoted, is there a point where you can slowly like weasel?
solidify it?
Yeah.
Validate.
Like you
it,
start to
No doubt.
weasel off the fake and
The algorithm is like, man, this song's like bumping, right? People are really feeling it, and then all of a sudden people go there. Again, I don't, and I also sort of thought like, you know, yeah. Anyway,
okay.
the tricky thing with that is that obviously the streaming platforms work on like a pooled approach, right? So all the money gets in there and gets pooled and then gets sent out to artists and blah blah. So this person was taking from a
Yeah, you're
pool that could
stealing
have gone
from
for
I
other
get it.
artists.
The bots part's the only part that I'm like, all right, fine, not the greatest. I was pumped at first. I was like, did he just make AI music and it caught on? Now he's making racks. But that stuff is also frustrating to me because people are just like, yeah, so I just had this thing, do all this stuff, and now it just pays me all my money. And I'm like, okay, this is starting to get frustrating.
Yeah. I also, we posted a poll on our social medias that school's back in session. The government has put caps on international students. Has this improved rental availability in your area? 20% of people said yes. There's a noticeable difference from last year. 35% said no, it's as bad as last year. 45% has said it's still gotten worse. I don't see that out there. I see applications down. And I see, I've noticed people in student housing who have actually reduced their price on housing. So I don't know.
Yeah, as I say, I've heard been 3 months rent and stuff going on in student housing.
Yeah.
But okay, we're going to talk about property management in true fashion. Chandler and I have terrible ADHD, and we just cannot keep it straight at all. I think we talked about some fun stuff though. But what we'll do maybe to segue into property management is just give a very high level of, I'm going to give a high level of kind of my experience and just what I've seen, so you guys know what to expect and what we'll be covering. And Chandler can maybe give a little bit of if it's just like how he's done his setup. So I'll start, but I think I've talked about it before on here. I started obviously with like a small couple duplexes, triplexes, whatever, and I ran them myself. And very quickly, I found that I was busy, and it all happened to me. I had 1 or 2 units that went empty for a month because I wasn't hustling them. I was getting responses, but I wasn't replying. I wasn't getting to the showings in time, and I was living in one part of town. The buildings were in another, and like it's just a pain in the ass to go through all the messages, finally get 1 or 2 people booked, drive out there, and guess what? Nobody shows up. And so like my motivation started getting killed and doing it. And it was just like craziness. But then like, damn, these units are just going empty. Like I'm losing so much money here. And before my whole thing was like, well, I'm not going to pay someone 8% of my rental income to manage these. But now I was losing more than that by not having people in the units. And so upon purchasing the following 20-ish units, they were empty. So I didn't really care about it. But I hired a management company to be like, okay, I need you guys to take these over as I finish them and start filling them up. That process, I called 3 or 4. I just had to Google them. I was new to the industry. I didn't have any connections. I called the top 3 companies that popped up, interviewed with them, met each one of them, kind of trying to understand the feeling of who they were, how they talked to me. Like I tried to explain them. It's always tough when you're young to be like, yeah, I have these big plans, these big lofty plans. I'm gonna do this, that, and other thing. Like, yeah, okay, you and every other kid that we talk to says this. And then I got them to give me quotes on their services if they were interested in doing it. Ultimately, I made my decision based on what I felt was a guy that came across a little more tough, I'll say. Like they just had a thick skin, in my opinion, which I felt you did need in this industry, especially because some of the product I was buying was older inventory with some problematic tenants. Oftentimes, the people I was buying them from weren't even collecting rent. Like they were just buildings that were occupied with people that were basically squatters. So it's like, all right, I need somebody with thick skin that can get in this because I don't have thick skin. So that's how I made the decision, and it proved to be wrong. And I think where it was wrong is partially I didn't read the contract with a fine-tooth comb, and so there were some issues in there. And then ultimately, they also were what I was finding more focused on things that they wanted to do and not things that I needed them to do. So they were involving themselves in the wrong stuff. Ultimately, I ended up firing them and deciding that I'm going to go in-house. I was like, okay, this doesn't work. Like I'm looking at what I'm spending with them. I'm going to go in-house because on top of being able to manage my units, even though they're a little bit more costly to go in-house, they'll be able to help me with project management. They'll be able to help me with all these other things because I'll have a person full-time. So I went on a hiring binge. That was difficult, like just doing a ton of interviews. I found a great person at that time. Sometimes I wonder if he listens to this, but he came on with me, helped out a ton immensely, like with getting rid of people that weren't paying, helping to get the project management done, and reoccupying the units with good, solid tenants. It was honestly, I wouldn't be able to do what I did without him, and I didn't realize what I didn't know at that time. Like the team I had then was amazing. Anyways, time went on. Ultimately, I got distracted with other things, and I think he kind of felt that he wasn't having the opportunity for growth. He stepped out and went to the government, which is always tough to lose someone to the government. He just said, plain and simple, like workload's lower, pays higher. Like why wouldn't I go? I'm like, yeah, it makes sense. And security's 100%.
Yeah.
So he made that move, and then I ultimately went back to the process of hiring again. I rehired in a pinch, like I had 2-3 weeks to do it, which was insanely stressful. Made the wrong decision. Got with someone who I thought had opportunity from their experience, and ultimately it proved to be quite wrong. And I was quite wrong on my decision. And I think actually there was a fair bit of theft that was taking place. We're actually going through the weeds of that right now. It seems like probably upwards of $20,000 in theft.
Of just cash? Or
yeah, I'll talk about some of those stories maybe in the next one, but like just basically taking advantage of newcomer tenants and bamboozling them with just like rules that didn't exist and getting them to send e-transfers direct, like just really offside, greasy shit. I'll explain it honestly next time in full detail, but and it hasn't been proven. So this is just my research and what I'm seeing right now. None of this has been proven in court, but this is where we're at. And then now I've gone back to a company, and in this process, like I've did a fair bit of due diligence, and I've learned a lot from previous experiences. And so I leaned on my resources, which is my network, to help kind of point me in the right direction, to hopefully get me on with someone that I hope is going to do well. And this is my current situation as I'm on with the company, because I will say the whole thing and this long-winded deal is the hardest part. And a bunch of big landlords I talk to, a bunch of big developers, like it's all fun and games to build a building. It's all fun and games to flip deals.
Yeah.
The meat and potatoes at the end of the day is how you run these properties, and you really find that out in times like this when things start to slow down. The cracks really start to show, and I'm finding that out. And I'll speak like I went to school of hard knocks. Like I wish I had made this switch earlier because we've had a lot of bad selected tenants. We have a lot of turnover, a lot of cleanup to do. Like there's a lot of work to be done here, and that's part of the reason I'm also cashing up because before making any more acquisitions, I want to have my current portfolio extremely stabilized, and I want to feel super good about it. I'm like, this is a running, ticking wheel that just like carries itself versus, we got another person that bounced, another person's leaving, another person this, another person damaged. So that's kind of been my experience, and I think the intention with this episode is to hopefully offer some advice, some guidance, some share experiences, and a bit of mentoring. Because if I've learned anything, like you need to have a mentor, and that's probably been one of my biggest problems. I haven't had a mentor in this space at all. And so I'm just learning by, again, trial by fire, which has been all good because the market's been exploding, but now the market's not exploding. It's going to be fire.
So how many years are you talking here from the first property manager?
First property manager would have been 4 years ago.
So 4 years,
5 years
four
ago.
property managers.
Yep.
Yeah. That's where I have never had a property manager.
Yeah.
And this is kind of because I've had so many secondhand experiences like that where people are like, they just aren't good.
Yeah.
So that's what we're going to talk about maybe in full in the next episode.
Yeah.
And at some point, we can even maybe bring a property manager on and they can defend their case.
Would be that would be exciting. But yeah, so next time, exactly, we'll talk about Chandler, go over his experiences as being the man and handling it all himself. We'll talk about what property management is, what they do on a day-to-day basis, what they charge, how they handle certain situations, what you should be expecting. And maybe we do bring someone in and even give a potential boost to them. I know I've had a few people reach out that want to come on, but it's hard to do so unless we really know them intimately. So we'd want to make sure we're very comfortable before we can kind of bring them on and say they're the man. But
or woman.
Or the woman, the team. Yeah. And actually, to your point, you're asking about some of the stuff I'm looking at buying and investing in. I'm actually looking at trying to buy property management companies.
Really? Interesting. Okay. All right. Well, stay tuned for that, guys. Thanks so much, as always, for listening.
Talk to you soon.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.
When I was broke, I had rich habits. When I was broke, I had rich habits.